Kia ora students, you love accounting, but there is a problem. Ledgers, you're not really sure how to do them. Trial balances too, maybe a bit of a mystery. So I thought I'd take a look at ledgers and how they work. In order to be able to follow along with this, you will need to know how debits and credits work. If you don't know how to do that, take a look at the video where I go through it. So this is a ledger account here. We call this a 3-column format ledger because there are other types, but we're only going to focus on this one. You can see that it has an account name at the top, and I'll show you a bunch of account names in a second. It has a date column, something called a particulars column. It has both debit and credit columns, and then it's got a balance column which will either be in debit or credit. Now the easiest way to learn how ledgers work is really just to do some. So we'll take a look at a few transactions and we'll put them into ledgers. So this here is an exercise that we've got. I believe it's in your book on page 26. And you can see that it's got 5 different transactions here for Hamish and his business, Hamish's Legal Services. So let's have a look at the first one. It says Hamish, the owner, contributes $40,000 cash into the business. Now we know with a transaction like that there's going to be two things that happen, 2 accounts that are affected. Those accounts for this one will be bank because we're increasing the amount of funds in our bank, and they're going to be capital because the owner is contributing money. So we'll do bank first. You can see that I've got all these different ledger accounts down here. I've got 4 of them. I've got the bank ledger account, I've got the capital ledger account, equipment, and loan. Okay, so I'm going to go to bank first, and I'm going to start by putting in the date, January 1st. Okay, I'm actually going to leave the particulars column blank for now, and we'll move on to the next part. Now we know that bank is an asset and it's increasing. If we're increasing an asset, we do the same as what it is. It sits on the debit side, so I'm going to debit my bank account for $40,000. Now the balance is where we update as we go through what the current kind of like amount in that account is, in this case the bank account. We had nothing in here to start with, so 0 plus 40,000 is 40,000. And that's 40,000 debit because we added debit to the account. The other side of this is capital, and you'll notice that I've left this particulars column empty until now. And the reason for that is what we put in here is something we call a cross-reference. A cross-reference is simply the name of the other account that we're going to use. And I always leave it to last because it confuses students. If you write it in at first, you forget, am I in this account that I'm going to write in here, or am I in the bank account? So I leave it till last so I don't get confused. So I'm going to write in here capital. That is the name of the other account that I'm going to use for this transaction. Okay, so we've done bank. That was bank. Now we go to capital, and in capital, I'm going to put January 1st. In the capital account, capital is owner's equity, and it's increasing, so that's on the credit side. To increase, we do the same, so we're going to credit capital for 40,000. That makes sense because we did a debit up here in bank and a credit here, so that balances. So our accounting Zen masters are all happy. So $40,000 of credit. Then I'm going to do my cross-reference. The name of the other account that I used was bank. Let's do 1 or 2 more. Number 2, January the 2nd, the business purchased some equipment worth $1,000, paying for it in cash. So I know that the 2 accounts here are going to be equipment and bank. So let's go to equipment first. In equipment, we're going to put the date, January 2nd. Equipment is an asset. It's on the debit side and it's increasing because we're getting more equipment. So that's going to be debited for $1,000. That's a balance of 1,000 because there was 0 in there to start with. So that's that one done, except we just need to do our cross-reference. So we've done equipment. We're in the equipment account. We're going to buy that equipment with funds from our bank. So the other account that we're going to use is bank. Now I go to my bank account. In my bank account, I am going to decrease it because I'm spending money on buying equipment. A bank is on the debit side, and if I'm decreasing it, I do the opposite. Opposite to a debit is a credit for 1,000 smackaroos. Now this is the first time we've done a decrease. So in our balance, we had 40,000 of debit, but we're doing the opposite to debit. We're doing a credit. So whenever you do the opposite, you're going to decrease it. So this is going to become 39,000. It's going to be 39,000 of debit in total because we've only decreased it by 1. In fact, this here, the sort of like final balance, debit or credit balance, that will only ever change if this balance were to go below 0. That's the only time this will change. Okay, so if you struggle to understand it, at very least remember this will only change if it goes below 0. In the bank account, if it went below 0, it would become bank overdraft, for example, be a liability. We still need to do our cross-reference. The other account that we used is equipment. Right, let's look at one more. The last one is a loan that was arranged from the bank worth $21,000. So if we're getting a loan from the bank, we're putting it into our bank account. By the looks of things, that's going to be two accounts. It's going to be bank and loan. So in bank, we've got a debit, which is what bank is. We're going to be increasing it, so we do the same. So that's $21,000. This time we had a debit in our balance, and we're adding more debit, the same thing. So we're going to increase it. 39 plus 21,000, if I'm not mistaken, is 60,000 of debit that we're entering on there. The cross-reference for this is the other account we're going to use. We're getting a loan, so we're going to put in loan, and then we'll go down to our loan account. In the loan account, we have loan, which is liability. Liability sit on the credit side of the accounting equation, and because we're increasing it, we're going to do the same, which is credit for 21,000. That gives us a balance of 21,000 credit, and the other account that we used was bank. That is how we do ledger accounts. If you would like to, you can go through and do transactions 4 and 5. It might be good practice for you. And once you do, you should end up with final balances like I have, 64,000 of debit in bank, $45,000 credit in capital, 2,000 debit in equipment, and 21,000 credit in loan. Once you've completed all the transactions for your ledgers, you can then go on and do a trial balance. Luckily, a trial balance is much easier than doing ledgers. There's no cross-references or things like that. All we need to do for a trial balance is go through each of our ledger accounts and put them in where they should be. So let me show you what I mean. In bank, for example, our final balance is $64,000 of debit. According to the great song, debits are on the left. So that 64,000 of debit is going to go into the left side of my trial balance. So that's bank, $64,000. Capital is $45,000 credit. Credits go on the right. So capital is going to go on the right side, $45,000. Equipment is the next one. Equipment has a debit balance, so it's going to go on the left side. And that is $2,000. And then loan is a credit balance, so that's going to be on the right side for $21,000. You may have already guessed by the underlining here that now I'm going to add these up. So on the left side, 64 plus 2 is 66,000. I'm actually going to use double underline because it's like a grand total, and I'm using a $sign too to show that it's dollars. Now, accounting is very zen, as you know, it's all in balance, so hopefully this side is the same, and if you do the addition, you'll find it is also $66,000, which is fantastic. If you get these to balance, it does not mean that you are definitely 100% correct. It means that you've done debit and credit for a similar amount, or same amount, for each transaction. You could still have used a wrong account. You could have increased furniture instead of equipment, for example. However, if they are not the same, you have definitely done something wrong. And it is, many an accounting student has been upset when they finally get to the end and find that these don't balance. Don't stress out if that happens. It is not just you. It happens to everyone, me included. Just go back, check your work, maybe check the answers. You will figure out where you went wrong, and you won't make the mistake again. We learn accounting by making mistakes and then not repeating them. Okay? If you have any other questions, ask your teacher. Until next time, good luck.